Jobs data gives the Fed the green light. That's our topic for this morning's Backstage Pass. Good morning, I'm James Lopez, president at HomeFi Corporation. Happy Friday. I hope you've had a great week so far this week. Stocks are lower so far this morning. Mortgage bonds are lower as well off of the BLS, the Bureau of Labor Statistics jobs report. Headline data came in and said for the month of June that 372,000 new jobs were created. And that was much higher than what was expected. The expectations were only about 250,000 jobs. So that headline data showed a pretty strong jobs market. Now there is some more data that's in this report that kind of gets overlooked. It's called a household survey. The household survey actually showed that there were job losses based on the household survey, but that also about 353,000 people left the labor market altogether, left the labor force altogether. The result of that was a flat unemployment reading of 3.6%, didn't go up, didn't go down. But because of the way the numbers game works, you had losses in the household survey, but you also had people leaving the labor market. It actually made the 3.6%, kind of made that math stay the same. So you got the headline data that shows some strong job market stuff, but you've got this household survey that kind of shows us a little bit squirrely. We'll see how that plays out in the coming months. Now, as a result, the Fed has basically said, off of that headline data, a few members came out and said, hey, we're greenlighting a 75 basis point rate hike for the Fed fund rate at their meeting later in July. So the Fed's going to get together later in July. Right now, they're talking about, hey, we're going to go ahead and raise the Fed fund rate by another 75 basis points. And remember, the purpose of that is to slow down the economy so that they can tame inflation and get inflation under control. That's good news for mortgage rates. Now, after 2 strong weeks of gains in the mortgage bonds, Freddie Mac came out and said, hey, last week, the average 30-year mortgage rate fell from 5.7% to 5.3%. And that's the longest or the largest single week decline in mortgage rates since 2008. So pretty awesome news. Gave a little bit of, giving a little bit of reprieve for customers looking out there that are shopping for a house and needing to get a mortgage. Unfortunately, this jobs data is kind of reversing some of those gains that the mortgage bonds have seen. Mortgage bonds are down today so far 36 basis points. The 10-year yield is up about 9 basis points. And what that means is that for today and going into the weekend, we're going to see mortgage rates starting to drift back up just a little bit. Now, that's all the news that we have for today. I hope you have a great day. Have a great weekend. Remember, stay positive. And go ahead and like, comment, and subscribe. If you have any questions, make sure you leave a comment. We'd love to hear from you. Again, have a great weekend. We'll see you on Monday.